If you give me 10 Bitcoin, I will give you 11 Bitcoin back at the end of the year.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Stan, thank you so much for joining me today. Super excited to chat with you. All right, Stan, you are the CEO of Belem Capital. Belem Capital is an alternative investment fund providing institutional investors with secure market-neutral access to DeFi yields. You studied computer engineering and previously worked in consulting, private equity, and at a single-family office. All right, so how was your time at the single-family office? I from your LinkedIn, I was reading that you wore a ton of different hats there. So can you tell me what did you enjoy the most? Which sectors did you enjoy the most at the single-family office?
So I started my career with Capgemini, which is like big French consulting firm in computing sciences. And after I joined like a family office. So we by nature family office must be diversified. So we invest in different asset class, real estate development, stock markets, private debt. And we invest indirectly in funds like private equity funds or different other kind of funds. And obviously, we started crypto. So we bought our first Bitcoin and our first ETH in 2019. And I would say the most interesting part would be the real estate development project because you have a concrete view of what you're building. Okay? So you buy a land, you create a team, and you are kind of like a orchestra master. I don't know how to, in French we call it a chef d'orchestre. Okay, so you manage engineers, you manage construction companies, you manage architects, you manage many people like the municipality team, and all of this need to work together. Okay, and the other one at the end who is supposed to say, okay, guys, try to work together, try to move forward together. And it's not your fault. It's not your fault. Don't try to put the responsibility on others when there is a problem. And we always have problems in this kind of business. And so, it was like a team building effort. And if you're lucky, after 4 years, you can see a whole building taking form, and you can see people living in it. And it's great. I mean, it's concrete job. And after, as you said, I'm a computing science engineer by formation, and I went back to my origins and jumped into crypto, digital assets, blockchain, DeFi, whatever you call it. So I'm from the TradFi world, and I moved to DeFi in 2019. Yeah.
So what was it about Bitcoin and ETH that got you intrigued back then? Because 2019, that was, I don't want to say it was the ultimate bear market. I'd say 2018 was worse, but 2019 was not necessarily a bull market. But there was the early beginnings of DeFi summer, or kind of the DeFi wave back then. So what was it that got you so intrigued, especially if you were more interested in real estate, because crypto is just so opposite of real estate.
Well, we moved from Paris. I'm French. We moved from Paris to Lisbon to increase our position in real estate. And in Lisbon, you might know, but Lisbon is a kind of crypto hub in Europe. We have a lot of very smart people in there. And this is where I learned about crypto, about blockchain. And as a computing science engineer, I really love the tech of the blockchain, the way Ethereum works, the way smart contract work. And I fell in love with the tech. And we decided to invest first in Bitcoin as a store value. And when I understood how Ethereum, as a blockchain, could really change the world as a layer of security, as a new internet layer, we started to invest also in ETH. And then the COVID arrives, and I get like 80% drop. Like after my first 6 months as a crypto investor, so it was a bit tough. But we hodl, we kept our position, and hopefully now we are super happy. And like 6 months after, it was forgotten, and like Bitcoin was going to the moon, and Ethereum too. And after we have the DeFi summer, as you said, later in 2020 or 21, and I met super smart people, and one guy named Laurent Bourquin, who was the founder, who is still the founder of MEV Capital. At that time, it was a little. I mean, he was starting his asset management company in Europe, in Lithuania, in Vilnius, and we were one of his first investors. So we invested in equity in MEV Capital. Also, we put our ETH and Bitcoin, not Bitcoin at that time, because we couldn't yield on Bitcoin at that time, but we put our ETH with him, and he farmed our ETH. So I learned about how we can farm, how we can generate yields based on the inefficiencies of the blockchain. And now we are launching Belem Capital with Laurent. So it's a long story, friendship and a professional story together.
Very cool. Yeah, and also I feel like you're not a true crypto investor unless you experience an 80% drop. So it's kind of a rite of passage. So that makes total sense. And it probably only dropped because you got in.
No, for me, like nothing. When I see 40 posts, I'm sitting well.
Yeah, of course. All right, so when you met Laurent, and I'm gonna butcher his name. Laurent is how but when you met him, were you already active within the world of DeFi, or did he kind of tell you more about this exciting world of yields and DeFi?
Yeah, sure. So we invested. So we had our Bitcoin on Ledger. We had our ETH on Ledger too, and I learned about DeFi. So Laurent told me a lot. So I started to do like DeFi myself, like simple stuff like Curve, Convex, Lido. But at that time, like 3, 4, 5 years ago, you could farm at 10%. I would say simply on Ethereum L1. Okay, it was doable. Like anyone was able to do 8 to 12% on ETH L1. So I started to do it myself, and I saw that Laurent was making 20% when I was making 10. And I said, okay, man, I'm gonna give you my ETH, and this is how the story began. After I bought a stake of his company. And it grew super fast. I mean, MEV now has 800 or 900 million of AUM. So it's one of the most important digital or fully on-chain asset manager in Europe. And I'm happy to be part of this. But what is the story of Belem compared to MEV? So MEV Capital is an on-chain asset manager, meaning that if you want to have access to our strategies, you need to be comfortable with having a digital wallet. You need to master. I mean, to understand self-custody, multi-sig, to keep your keys, etc. When I'm speaking with some people in Switzerland, in Luxembourg, for example, from TradFi world, they don't know how to do this. Okay, for them it's impossible to be in self-custody, to keep keys, to keep either they don't want to or they can't legally. So we decided to with Laurent and MEV team to do a joint venture, create Belem Capital, which is a Luxembourg regulated fund on which we incorporate MEV strategies. And I am very lucky to have two more partners, Charles and Nicolas with me, who are coming from the TradFi world, who bring me a lot of comfort to our investors, like about risk management, about audit, about all of these things that TradFi people need. Okay, so we have, I would say, the world of DeFi, ancient world of DeFi, with the world of TradFi regulation, and we created this fund. And we are super happy. I mean, it's doing well, and we launched it last month in April, and it's doing well. We have a lot of interest from investors for sure.
Very cool. So you met Laurent. He was doing some really interesting stuff with yield. You decided to become an LP in MEV. At what stage did you decide, okay, this is actually a really crazy and cool business, I want to become a GP as well, or was it simultaneous?
No, I first became LP, and I would say very fast I saw, because when you are an LP with MEV, you need to execute transaction yourself on your ledger. You have a lot of contact and communication with the asset management team. Okay, because when there is a trade to do, okay, they call you or send you a telegram. So, okay, Stan, are you ready? We're going to sign a transaction. You need to execute it. I was asking, okay, what is this transaction? And I understood what trades they were doing, and it's totally transparent for the clients. And this was my job as an investor, I felt, okay, those guys, I think they are the best in the world on what they're doing. I want to be part of it. So I proposed to Laurent to buy a stake of his company, and he accepted. And so now we are together. And yeah, that's great. So first I was an LP, and then I became a partner in GP. Yeah.
Could you talk a little bit more as to why the MEV setup is so on chain? Just because, I just never heard of being an LP in a fund, even within crypto, where the LP is like, executing, approving the transactions and whatnot on chain.
Maybe the word LP is not the good one, because LP is a word for a client of funds. LP meaning limited partner meaning you own limited partnerships shares, which is not the case with MEV Capital, because you don't own shares. You still are, you still own your assets. Okay, you have your keys, you have your assets, and MEV with one key have access to your portfolio to initiate transaction, but MEV cannot do any execution without you. And you, as a client with two keys, you can remove your asset from all position. You can do whatever you want without authorization of MEV. So LP is not the good world. Client is the good world.
Interesting. Yeah, no, I could definitely see how folks in Luxembourg and Switzerland and et cetera are not comfortable with this kind of setup, because they feel like there's no way we can do this.
We're talking with of wealth managers, of family offices, or high net worth, who I would say, since 2 years, they have identified, I would say, digital assets, blockchain, crypto in general, even if I don't like the word crypto, because it's this gambling connotation, and we are not doing crypto, we are doing DeFi. And these guys, they have identified this asset class. They want to be in, but they don't know how to access it, because they don't want to open a digital wallet, even on centralized exchange. And we give them this possibility by buying normal fund shares, as they are used to do with private equity funds or any fund.
So I guess, is it safe to say that Belem Capital is almost akin to a fund of funds that only invests in one fund? Is that kind of accurate, or how do you describe Belem Capital?
Belem Capital is, I would say, it's not a fund of funds. Is
maybe a fund of fund?
Is institutional arm of MEV Capital. It's a joint venture between MEV Capital, who is an asset manager, and Belem Capital SRL, who is our GP company in Luxembourg, who is bringing this institutional regulation lawyer in order to be sellable and to create compliant with TradFi clients.
Interesting. Okay. And so Belem Capital, are there multiple strategies that clients can deploy into, or is it like, hey, I'm deploying into Belem Capital, and Belem is going to deploy the capital into the correct strategy that Belem decides?
No, so we have 3 asset class. So like sub funds or compartments. We have USDC, which is fully stable coin. So 100% market neutral, zero correlation with Bitcoin or ETH. And we deploy our strategies on stable peg assets only. One other compartment is Bitcoin. So we deploy on pegged Bitcoin on EVM. So it would be only, on Bitcoin and ETH class. We generate the alpha on top of the Bitcoin and the ETH. Okay, so there is a volatility depending on the price of Bitcoin and ETH. And so we have 3 different strategies, and this is the choice of the LP to choose the strategy. Okay, so today, most of our LPs subscribe in USDC because they don't want to have exposure to Bitcoin. I would say we have 2/3 on USDC and 1/3 on Bitcoin. And our mandate on USDC is to generate yields. Okay, last year we did like 34% on USDC. We did almost 8% on Bitcoin. My mandate on Bitcoin is to generate yields on top of Bitcoin. Okay, it's not my mandate to give you the price of Bitcoin at the end of the year. If you give me 10 Bitcoin, I will give you 11 Bitcoin back at the end of the year. Okay, whatever the price of Bitcoin is. So our strategies are market neutral on the underlying assets.
What are the types of clients that are attracted to these different strategies? Because I would imagine the USDC stablecoin strategy has to be people that are interested but still kind of dipping their toes in. Bitcoin has to be Bitcoin believers that already are very comfortable with Bitcoin and ETH. I don't know who would do the ETH now, but I mean, they have to be long-term ETH believers.
Honestly, we don't have so many demand for ETH now. I'm an ETH believer. I mean, personally, I own tons of ETH. With our family office also, we still own tons of ETH. But yes, it's true that today there is no demand for ETH. There's no new demand for ETH. So yeah, we keep it. I think it will come back. I still think Ethereum will be the major blockchain in the future where most of the DeFi will happen. I mean, we do a little bit of Solana, but I would say, 95% of what we are doing is on Ether. So,
are you mentioned Solana? Are you guys going to launch a Solana denominated strategy?
Yeah. So at MEV capital level, we already have, I think we have like $50 to $60 million in Solana that we are farming today. At Belem Capital, we don't have because we didn't receive any demand for now. But it would be very easy to create a new asset class for Solana, as we already know how to do it. So,
could you talk? I mean, this is a better question for Laurent, but could you talk more about how the opportunities, how the yield is identified, sourced, evaluated, sized, like how the stablecoin strategy is operating and the BTC strategy is operating?
Yeah, sure. So we have I would say 5 different strategies. So we call it liquidity providing, which is market making, pool arbitrage, lending, borrowing, and I would say under collateralized loan liquidations. So pool arbitrage, I guess you know how it works, but it's on Curve or on Uniswap v2. The bid and the ask spread is calculated based on a mathematical formula. On Uni v2, it's x times y equal k constant. So meaning if there is a difference in pool imbalance, because the price of an asset compared to the other one will increase or decrease. So we do arbitrage, and the protocol incentivizes arbitrager to rebalance the pools. So this is where we're doing pool arbitrage, and we're making money on this. Liquidity providing, so we provide liquidity on pools, and we get paid by the users when they pay swap fees. For example, lending borrowing strategy. So if someone, let's say, that has Bitcoin and they want to generate yield on top of this, they can deposit Bitcoin as a collateral. They get a loan with an LTV of, let's say, 50%. And with the money borrowed, on top of our collateral, we can generate yield. So this is kind of typical cash and carry strategy. Mainly that's our strategies. Yeah.
And so you guys decide to spin, or MEV decides to spin up a new strategy simply based off the demand. So if clients are saying we want, or maybe it's more so opportunity, less so demand. Maybe they're like, oh, we see an opportunity in SWI. We're going to now do a SWI strategy. And then for Belem, it's okay. We have clients now that want the SWI strategy.
What do you mean in terms of assets? Is USDC?
So I guess for Belem decides to open up a new pocket or strategy based off client demand, but MEV or MEV, they decide to spin up a new strategy simply based off where they can generate the most yield, or?
Yeah, no. So the client demands is only the assets. So we have clients who has USDC. Okay, we want to farm or to yield on top of our USDC. Clients who have Bitcoin. Okay, we want to yield on top of our Bitcoin. So they will send us, or ETH, same for ETH. They will send us their asset, and we will deploy on the best risk-adjusted strategies that we see on the blockchain. And we will balance the position every week, even every 2 weeks, sometimes or 2 times a week. Depends on the volume, depends on the market. But this is our secret sauce. Okay, So the idea is to deploy our assets in diverse protocols, diverse assets. We need to be diversified. We don't want to put everything in the same protocol and the same assets. But as I told you before, making 10% to 20% today in DeFi is much more complex than it used to be 3 years ago. Now you need to deal with composability, cross asset, cross chain, cross protocol. And it's very important to do proper due diligence to understand who are behind the protocols, to understand what is the liquidity of the protocols, how long this protocol or this asset has been live, how frequently it is audited, once a year, twice a year. When there is a code change, is it audited right after? So we have 18 person in our asset management team working on this, working on due diligences, the protocols we're investing with, and that's our secret sauce. So we have, I could show you later. We have a risk scoring matrix on protocols and assets. And if the protocol or the asset don't reach a certain number of points, we don't even put $1 on it. Yeah.
And in your opinion, the biggest risks are related to hacking, just the underlying protocol being hacked, or what is the primary risk?
Yeah, I would say there are two main risks. I would say depeg of a stablecoin. So that's why our experience is very important, to know who is behind, to check that the stablecoin are really backed by the assets, and how the stablecoin is coded. If it's hard coded, or if I would say if it's algorithmic stablecoin. Second is smart contract hacking for sure. And yeah, we need to know the team. We need to be sure of the team. We need to meet the team, and to check the audits and to do our proper audits. Yeah, that's the main risk on DeFi.
How many protocols and applications are these strategies active on? Is it like 10? Or are we talking like hundreds?
No, we have whitelisted like 40 protocols, but currently we're invested into less than 15.
Oh, wow, okay.
Yeah, and we balanced, like yesterday we rebalanced most of our assets, because we identify better yields on this strategy or this protocol, this asset. So
are the strategies rebalanced on a set basis, or is it simply every quarter, for example, or is it just based on the opportunity?
No, it's based on the opportunity.
Are these strategies capital constrained? Like if someone, if BlackRock was like, hey guys, we want to give you $2 billion, would that just be impossible?
First, I would be super happy. No, but so yeah, today we manage almost 800 million, and we are still good. I think the market can still take a few more billions. Tens of billions, I would say. The market is definitely growing. You see the TVL of stablecoins on Ethereum is exploding. No, the market is growing. I think our point now is to maintain our market share, and so we have new clients coming weeks after weeks, and we try to maintain our market shares. Yeah. But the market can take more items for sure. But again, BlackRock today is not doing. Below, what they're doing, but they are not entering the sophisticated DeFi as we know it. So we still have room. We still have space for us.
Yes. Okay. That brings to mind kind of
For me, if BlackRock arrives, it would be a great signal for DeFi and for the ecosystem. It will show the world that you can do DeFi, and it's and it will bring best practice. It will bring safety. It will bring confidence. So I think it's going to be great. Yeah.
Yeah. What do you think about alpha decay with these strategies? Are there concerns that the sustainability of these strategies, that maybe after, I don't know, 5 years that because you said yourself, you're like back in the day in 19 and 20, you could just easily generate 12%, 10% yield without doing much. Now it's a lot more complicated. How do you expect things to evolve over the next 5 years in terms of the decaying alpha?
About generating alpha, you mean?
Yeah, and just the sustainability of the current strategies that you guys are implementing now.
I think we're going to see different types of tokenization. We're going to see different kind of asset. Today, we are mostly working with financial assets. Maybe tomorrow we're going to do DeFi, or we're going to be able to collateralize, tokenize real estate, tokenize everything. So I think DeFi was evolved with different type of asset from the real world. I think composability is a very important thing. So, and I think in 5 years, you will be able to collateralize your, let's say, a token of your house on the blockchain, get liquidity from it, and with this liquidity, yield on some of those things or use it. So I would say horizontally, it will expand with different assets, for sure.
And going back to Belem and the structure there, if I am an LP, are my funds within an SMA, or is it a pooled vehicle where it's all pooled together and then you guys allocate?
No, yeah, it's all pooled together in a compartment, in a share class. I mean, USDC with USDC, Bitcoin with Bitcoin, and ETH with ETH. Okay, and after we deploy everything together. Yeah, and we have an auditor, we have a fund manager in Luxembourg that is doing the NAV calculation for each LP, and yeah, so we calculate at the end of each month the value of each position for each LP.
And also, I guess MEV and you guys, you're not looking at. There's no trading based on market catalysts. Like, for example, Trump announces 500% tariffs on Europe or something like that. It's not. I guess the volatility is good, but there's not any directional trading based off that information, correct? It's just market neutral.
Yeah, correct. So, we are not long shorts traders. I would say most of the long short funds working on centralized exchange, they always have a directional bias. So they're supposed to be market neutral, but when the market drops, they mostly drop. So example for Q1 2025, so like last month, we did 3% with our USDC strategy, 1% with our Bitcoin strategy, and 0.8% with our ETH strategy. So I would say the volume was super low. So last year, in 2024, at the same period, we did 7% in USDC. This year, we did 3%. It's still better than Nasdaq, Nvidia, Tesla, Bitcoin, ETH, So volume is slow, so it's less trades, getting less fees, but we're still positive. I would say worst case scenario for us is zero volume on the blockchain, and we do zero for 1 month. Okay. Except, I would say Black Swan, like a smart contract hacking, DPEG, we are not supposed to do any negative months. And our purpose is to generate consistent, reliable, and homogeneous yields month after month. I would never do like 6-7% per month. My purpose is to do 1 to 2% per month, even 3 sometimes. But I want to be consistent and with zero negative months. That's my goal. Yeah.
How many trades? I mean, this is are we talking thousands and thousands of trades per day, or is this 100 trades per day? Or I guess it varies based off the strategy. But
I don't want to. I think last year at MEV, Laurent, if you listen to me, I hope I'm right. We did we executed more than 100,000 transactions.
Wow.
So yeah, it can be a lot. It starts to be a lot with the sophistication of the ecosystem. It starts to be a lot. Yeah.
Okay, so this is a great question to ask you because you worked at a family office and you're in crypto. But if I'm a high net worth individual or family office or even institution, and I have my little buckets of PE, venture, et cetera, and I'm looking at crypto, in your opinion, and obviously you're going to be biased here, but in your opinion, what is the ideal crypto allocation? Should it be a big chunk of Bitcoin and then a big chunk of market neutral strategies, or how do you imagine that?
For crypto only, you mean? Or for yeah. But for sure, we need to have. I would say 50% of Bitcoin and 25% ETH or Ethereum related assets like AV Link. I mean, that's my personal opinion. Okay, I think DeFi at the beginning and DeFi will explode on Ethereum soon. And yeah, the rest would be farming with stables to keep stables in case of a market crash, to have stable to reinvest. So I would say 50% Bitcoin, 25 ETH or ETH related assets, and 25% in USDC, USDT, generating yield on it.
No early stage venture crypto?
No, I like liquidity, and I don't want to be invested in non-liquid assets. That's why at Belem we propose a monthly liquidity, which is super important for me as an investor. I know it's the main point. I mean, return on investments, risk management, and liquidity. And I think with Belem, thanks to Mev and our team, we reach those three pillars. We have great returns, we have a monthly liquidity, and we have a super high quality risk management. I told you I did real estate development. When you do real estate development, you invest, wait 5 years, you don't see your money for 5 years, and you need 5 years to sell the apartment. It's super. Now I want to stick on liquid assets.
So I think you mentioned that Mev is now at like 800, 900 million in AUM. But when they started back in, I don't know, 2020 or whenever, I think they started with around 2 million.
Yeah. So let me be precise. AUM and AUC. So Mev has, I think like 500 million of AUM. So SMAs, clients, and today 400 million of AUC, aka AUM through votes, through on-chain votes, like Morpho, etc., etc.
So the AUC is the people that are actually executing the trades via their multi-sigs?
AUC, so you know how on-chain vote works. So like, Morpho, maybe the protocol. Mm-hmm. So you can deploy. Okay. You deploy your.
So they're a curator on Morpho.
And yeah, Mev is a curator on Morpho.
So what do you attribute that insane, AUM, AUC growth to? Because going from 2 million AUM to whatever we'll call it 850 million AUM today, like that is incredible. Within 5 years. So what has been the main driver of that?
But the quality of the team, so the team started with Laurent was an ex-banker working with SocGen, so Stanislas, and so he has this financial feeling and knowledge, and he has also a super strong technological knowledge, and you recruited top blockchain developers. I mean, our CTO Xavier come from one of the best engineering schools in Paris. He has a PhD in mathematics, and he's the one who is deploying our bots. So, I mean, the quality of the team is the most important, and of course, we generated consistent revenues, no accidents, and after like your track record speaks. Only track record speaks. So when you have a good track record, people come to you, and that's what's happening. And yeah, that's it.
Yeah. So speaking of that, how do you expect the conversations to flow, the LP conversations to flow going forward? Because we have Trump in the new administration. He's very pro crypto compared to last administration. And it seems like there's been a lot of pro-crypto legislation entering the U.S., sphere. Will that spill over to Europe? And do you expect the types of LP conversations you're having to go from high net worth to maybe endowment and pension?
I would love to be in USA, honestly. We are a bit late in Europe. We have a framework in Europe, regulated framework called MiCA, which is very restrictive. But at least we have a framework to do crypto, to manage crypto or digital asset. So that's the first step. But our framework is super, super complicated. We could do another podcast with our lawyers if you want to talk about it.
I guess, sorry, just to jump in here. What is the primary issue with the restrictions that they put? Is what's the major headache?
Problem in Europe is that we regulate before existing. So if you don't have money, before creating your company, you need to spend like hundreds of thousands of euros before having your first client and making your first euro of revenue. So regulation before that. I think in the US, you have more you create things, you let people make money, you let people make mistakes maybe sometimes, and after you regulate. In Europe, we regulate first, so we had the super strong regulation without a strong ecosystem. So it's difficult to have big companies in Europe because how can you make money if you need to spend 200,000 euros in lawyers in legal fees before getting your first euro of revenue? So it's super difficult. But we're going to make it. I'm sure we're going to make it.
And so how do you think about building out the team at Belem? Because, Mev is doing a lot of the execution and trading and whatnot. So Belem, how does the team look there? Is it primarily, sales, marketing, and diligence I guess even diligence, it's kind of Mev, but tell me about the team building.
Yeah, sure. So we are 3 GPs at Belem. So myself, Charles with the next banker, super strong experience in risk management with UBS and BNP. And Nicolas, who is our chief commercial officer, who is taking care of, I would say, all of the sales, commercial, marketing aspect. He also has 2 funds in Luxembourg that are not doing DeFi, that are doing infrastructure token, invest in infrastructure tokens. So first, we are telling to TradFi people what DeFi is, and we're talking the same language as these guys, okay? It's not easy, but we're going to Geneva, we're going to Luxembourg, we're going to Monaco, we're going to all of these places in Europe, and we explain to people what is DeFi with their own words, okay? And that's first step, okay? And once we deploy capital with Belem, with Mev, we discuss with Mev which protocol we're gonna allocate this capital. We have a kind of control with them, and we decide together on which asset, which protocol we're gonna deploy the capital of our LPs. I would say we have a kind of second layer of security and control made by myself and Charles. And Charles is looking a lot on is auditing, I would say, on the trad finance way. Okay, we invest in let's say Curve. What is Curve? How much is on the balance sheet? Who are their shareholders? How many money they make last year, etc., etc. We do a kind of TradFi PE kind of check, and that's it. That's it. And we have, of course, all of the regulation parts in Luxembourg. That is can be a nightmare, complicated, but it's okay.
And for service providers like auditors or fund administrators and whatnot, does Mev have their own layer of service providers that are then sending stuff to Belem, and then you guys have a second layer? Or is it just Mev sends their info to you guys kind of make that, filter that through the fund administrators and auditors, et cetera?
We have our own fund administrator called KBO Capital. He's our IFM, so Alternative Investment Fund Manager in Luxembourg. We have our auditor called Oren Luxembourg, which is one of the top 5 audit firm in Luxembourg. We have our lawyers, we have our bank, and so now we are totally independent.
Is there a tool or product that you wish existed to simplify the operational process or operational headaches within Belem Capital? Or is if you could create a product that you could just design right now, you're like, man, we have a lot, fund administration's a pain in the ass because of these reasons, and I'm going to wave this magic wand and make it better. Is there something like that, or not really right now?
No, it's okay. The main point was KYC. When you have a regulated fund, you need to do KYC AML to your LPs. So with Belem, we accept fiat. So client LPs can send money through bank transfer to our bank, or subscribe directly in crypto through our Kraken account. So when it goes through fiat, it's easy. The bank is doing the KYC AML. When it goes to the Kraken account, We do have a KYC AML form that the client has to fill, but it's more complex to control the source and the origin of the funds.
Speaking of that, something that I've heard people work on is that LPs can subscribe in crypto, but they have to do it from a KYC crypto exchange. So it's like, hey, from my Coinbase account, I'm gonna send it, and that mitigates some of that.
Yeah, you cannot send money from a ledger or from decentralized. It has to be through a regulated, MiCA compliant and centralized exchange, and on the name of the client. If not, you cannot accept the money.
So how do you?
More complex. That was the most complex part to implement and to put to life, But it's okay. It's done. So we are very happy.
How do you expect the fundraising environment to look going forward at 25? Just because, it's been volatile, but, crypto seems to be, at least in the States, seems to be really getting a lot of attention in terms of more institutional like folks. So how do you expect 25 to go in terms of attracting LPs?
I see a lot of traction, and honestly, we launched Belem beginning of the year, and it was not the easiest period, but we received a lot of interest from LPs, and I think 25 is going to be a good year. Yeah, I'm super bullish. You have the Bitcoin reserve in the US. I think today, like 10 countries say they're going to do a reserve. We have the DeFi that is exploding, the stablecoin volume that is exploding. All countries want to launch their own stablecoin. I think it's the beginning. So I'm quite bullish. I think the right timing.
So speaking of that, 10 years from today, you're back in the podcast. Where's Belem Capital?
So 10 years from today. Wow. I think in 10 years, as I said, you will be able to tokenize and collateralize most of the real world assets on the blockchain. And I think what we do today with financial assets, financial tokens, will be doable with a house, your car, your shoes, your bag. You will be able to tokenize this, collateralize it, get liquidity from this. So I think Belem Capital will be one of the major actors on the financialization of RWAs in Europe.
Very cool. And what you thinking 100 billion AUM by then, or maybe even bigger?
Yeah, that would be great. I'd never give an objective like this, because it can be much higher, it can be much lower.
Yes, yeah, of course. So what do you think is the most significant opportunity in crypto going forward? Like, is it just Bitcoin, or is it stable coins, or is there something else that we're not talking about? What is in your opinion, the biggest opportunity within crypto?
I think stablecoin is going to change the world. I think Donald Trump understood that US stablecoins is a great opportunity to democratize the utilization of the dollar. So I think stablecoin will raise. As of today, only US stablecoins are raising, but I'm looking to Euro stablecoins. I hope we're gonna have private Euro stablecoins, and I think stablecoin is going to be the next big thing. And being able to yield on your stables gonna be a great thing to watch. Yep, but not in other currencies as well.
And you mentioned that kind of everything is going to be tokenized, and there's going to be not everything, but lots of financial assets will be tokenized and be able to be traded. How do you expect DeFi to evolve within that? Like within that world where so many different assets are tokenized, do you expect strategies like what Mev is doing with kind of the not high frequency trading, but just the very active market neutral trading? Is that going to just explode in activity because there's so many different assets that are being traded on chain?
Yeah, yes. Today we are very limited in terms of type of assets that we can work with. It's only money, only currencies. There's nothing else. But imagine the way with the world when you will be able to tokenize anything and collateralize it generate liquidity on it, generate like a liquid staking token about your house that you're going to tokenize, and you're going to be able to work with your token of your house. Maybe, you know, it's infinite. The world can be infinite.
Yeah. How do you expect real estate to evolve within the world of crypto? Like, do you imagine multifamily offices will like tokenize the rental yield or something like that? Or you know, I don't know. What do you think?
Collateralization today works well for institutions. If you are like a person, a private person, if you're a family, you have assets, it's very difficult to collateralize it. Okay, except if you have a mortgage with your house. But you have I don't know, like you own UST bonds, or you own French debts in France. You cannot put it at your bank, collateralize it, and get a loan on it, like with a 50% LTV. It's impossible to collateralize things. I think blockchain will allow people to collateralize their assets. It can be a car, it can be a house, it can be anything. And today, this is not accessible for people. It's not accessible. Even like, so we have a family office. I'm talking about Europe. I don't know about USA, but we have a stock portfolio. We're not trading it. We keep it. We don't want to sell it. We think we have good stocks. It's not easy to put it as a collateralized to get a Lombard loan, because it's Lombard loan in French, and to get like a loan with, let's say, 50% LTV on it. It's not easy.
Why is that? Due to regulations, or I would imagine that would be.
No, it's not. You know, they don't do it too much.
Interesting. So there's just not a lot of people that are wanting to lend against that basket of assets.
Yeah.
Very interesting. Huh. Very cool. All right, Stan, this has been stellar, but it's time for the closing questions.
Yeah, sure, Andrew.
All right. What is the best advice you've ever received?
Only people that don't do anything never do mistakes. So go forward and make mistakes.
I love that. That's awesome. All right. What are you, we you know, during our conversation, there's a lot of optimistic talk, but what are you most pessimistic about within crypto?
Quantum computing, find a way to increase the supply of Bitcoin, change the protocol of Bitcoin. Imagine.
So you're talking about like quantum. Maybe quantum will break encryption and increase the supply.
Quantum is a threat. I mean, have you seen how fast this thing has been? And I mean, yeah, I think it's a threat. It's the main threat for me.
Okay. Alternatively, what is the most optimistic viewpoint that you have about crypto?
Bitcoin becomes the main reserve, flipping gold, and Ethereum becomes the security layer of internet. That would be the great world for me.
Yeah, me too. Do you, if you had to put a probability, like, you know, are you saying that with a 60% probability or like a 70% probability, or is it like, you know, 50-50, who knows?
50-50, meaning I have no clue.
That's fair. All right. What is the biggest thing that you've changed your mind about around crypto after being in crypto for many years? What's the number one thing that you've changed your mind about?
Well, first I thought Ethereum would be the one and only blockchain, and it's not true anymore. Now we have Binance, we have Solana. Solana is doing well. Whether you like it or not, it's doing well. So I think competition within blockchains is something I didn't see.
Is there a piece of content, whether it be a blog, a book, a podcast, that had a major impact on you?
Yeah, I read the bio of Winston Churchill. I don't know if you know about him. Prime Minister of England during the war.
I'm American. I'm not that American. Of course I know.
And this man had an amazing life. And
what's the name? What's the name of the book?
Winston.
Oh, just called Winston.
Yeah. I'm gonna send you the name of the author. And yeah, I mean, he had an inspiring life, you know. And he was this kind of man who was drinking a lot, doing no sport, but keeping like
level head,
a sharp mind, and a lot of courage. And yeah, he was thinking outside the box, I would say.
Yeah, you know, and it goes back to your quote that you like, which is, you know, don't worry about making mistakes, just take action. I mean, like Winston Churchill was just like, he would just like go for it. So No, it's very appropriate. Very cool. All right. Last question. How do you define success, and do you feel like you've achieved it?
Well, I think I have 3 kids, wonderful wife, great family. So yes, I think I reached success. It's difficult to define success. There's so many ways to succeed. So yeah, but I think I reached success. Yes.
Amazing. Stan, thank you so much. Where can people learn more about Belem Capital and yourself?
We have a website, belemcapital.com, on LinkedIn. You can see my profile on LinkedIn, Stanislas the Maistre, and Belem Capital. You can check also Maistre Capital, which is our partner, and online. We are reachable anytime. We're gonna be in Geneva for some conferences in May, June, and we're gonna be in the main crypto conferences in Europe for the next year for sure. So I hope to see many people there.
Amazing. Thank you, Stan.
Thanks, Andrew. See you soon.